Asian markets mostly fall as US data stokes fears of inflation and slow growth. Iran's currency devaluation has led to unaffordable essential medicines despite government efforts. And we'll explore the German economy as Conservative leader Friedrich Merz prepares to become Chancellor, with historic gains also made by the far-right AfD in Sunday's election. Hello, I'm Isabel Ewing with the latest business and finance news here on TRT World. The Asia-Pacific region kicked off the week with a stumble as markets reacted to unsettling economic signals. US investors are grappling with fresh concerns, prompting a ripple effect across global stocks. While some indices saw minor dips, others held steady or edged up slightly, painting a mixed picture of resilience and caution. Here's a closer look. Hong Kong's Hang Seng index slipped 0.63%, a notable drop after reaching a near three-year peak last session. The decline reflects investor jitters over US data, hinting at stubborn inflation, rattling faith in stock stability. Indian stocks took a hit, with the Nifty 50 falling 0.76% as trading began. Alongside the BSE Sensex's 0.55% decline, this signals growing unease about economic slowdown spilling over from global markets. Australia's S&P 200 climbed 0.12%, a modest gain amid choppy trading in its final hour. Unlike its regional peers, this uptick hints at a resilience despite fears of a broader economic stall. For more on this, we're joined by Tim Waterer. He is a business and trade analyst and joins us from Sydney. Tim, thank you for being with us. How will this 0.63% drop in Hong Kong affect investor confidence?
Good to be with you. Yeah, a drop today in the Hang Seng. I don't think investors will be too concerned. I think what we saw today was basically some profit taking coming to fruition, as you mentioned. The index just recently hit a three-year high, so I think following the falls in the US on Friday night, I think a lot of traders had the idea that it mightn't be a bad time to lock in some profit. So that contributed to the falls today. But I think the broader constructive bullish picture remains intact. The Hang Seng still up 19% year to date. Still seeing a lot of interest from foreign investors for the Chinese AI sector, and that's playing out on the Hang Seng index as well. So not the best start to the week, but I still think a lot of enthusiasm for the Hang Seng moving forward.
And Tim, India's 0.76% Nifty decline, is that a sign of deeper trouble?
Yes, I think there are some worrying trends there for the Indian economy and also the Nifty itself. And I think the drops we're seeing reflect some worries about, I guess, the direction of growth in India right now. The last GDP reading we had there was 5.4% now. On a global scale, that's not too bad, but it's well down from the 8.2% we saw just the year before. So there's also signs of softer consumer demand there as well, and maybe some thoughts that the central bank there maybe left rates a little bit too high too long, and that the effects of the prolonged period of higher interest rates, that's now starting to take a toll on Indian growth. So I think we are seeing a little bit of a shift in enthusiasm away from the Indian stock market and perhaps moving towards the Chinese and Hong Kong equities, which perhaps have the better growth trajectory at the moment.
And we saw a rise in Australia's market, 0.12%. Why that rise against the trend?
Yeah, so Australian stocks, they had a nice rebound today. Started off a little bit shaky, but then came good in the afternoon. And that was largely down to a big improvement in the financial sector. So last week after the RBA cut rates, but in a hawkish manner, a lot of the banks come under pressure. So Commonwealth Bank, for example, that was down 8% last week, made up 3% of that today. So I think investors were looking around and seeing some value in some of those recently beaten down financial stocks. And that contributed to pushing the financial subsector higher and boosting sentiment across the overall index in Australia today.
Tim Waterer, a business and trade analyst, joining us from Sydney. Thank you so much for your time.
Thank you.
As the Iranian currency continues to lose value, prices for essential medicines have surged in the country over the past month. While the government has taken steps to increase insurance coverage and boost domestic production, these efforts are not enough to offset the sharp price hikes. For some, the increase is so steep that vital medications are no longer affordable. Reza Hatami filed this report from the Iranian capital, Tehran.
29-year-old Ali Reza has been working at this pharmacy in western Tehran for the past 5 years. Most of the medicines and other pharmaceutical products sold at this pharmacy and in pharmacies across the country are made locally. For years, the government has kept the prices low by ramping up domestic production. But over the past month, prices have gone up considerably.
Prices have seen a shocking spike over the past month. The price of some medicines has quadrupled. For example, a vitamin A ointment that used to cost 10,000 tomans is now 40,000 tomans. Plavix increased from 330,000 tomans to 650,000.
He says that insurance coverage doesn't keep up with inflation, and in the end, it's the patients who are hit with a higher cost.
The Social Security Organization has increased the percentage of coverage, but with prices rising, it doesn't make a difference for the patients. They still have to pay more.
An official from the Iranian Pharmacists Association says that 3 out of 10 patients who enter a pharmacy don't get the medicines they need due to the new prices. The government has justified these price hikes as a measure to prevent the bankruptcy of pharmaceutical manufacturers.
Many drugs cannot be produced domestically because they are not economically viable. Therefore, we are forced to increase prices to compensate for the company's losses and urge them to continue production. We also need more foreign hard currency to import the medicine we need.
The government allocated a sizable medicine subsidy in 2018 when US President Donald Trump abandoned a multinational nuclear accord with Iran and imposed harsh US sanctions. Washington claimed that food and medicine were waived from its sanctions, but in practice they were affected. Faced with the budget deficit and the devaluing currency, the country's parliament voted to scrap an annual $9 billion subsidy in 2022. The subsidy cut caused a decline in domestic production, which in turn contributed to the recent price hikes, as the local currency continues to nosedive.
The rise in medicine prices did not keep up with the inflation rate. The price rise isn't enough for the producer. This means we can't afford to supply raw materials for our medicines. Therefore, our production volume drops.
Officials say local companies were forced to cut 30% of their production to make ends meet.
In comparison with international prices, medicine prices in Iran are still lower. Yet, it's still not affordable for many Iranians, as the country grapples with an economic crisis. With further subsidy cuts and rising exchange rates on the horizon, both patients and pharmaceutical companies are facing a challenging future. Reza Hatami, TRT World, Tehran.
And for more on this story, Reza joins us now. Reza, how has the recent devaluation of Iran's currency directly impacted the affordability and availability of essential medicines for patients?
Well, devaluation of currency affects everyday life of ordinary Iranians, and it's not just the medicines, but medicines is an important part of it. Let's not forget that Iranian currency has been on a steep devaluation trend over the past decade, I would say, decade or so. And certainly in the past few months, let's not forget that when the new President Pezeshkian, took office in July last year, $1 equaled 59,000 tomans. And now in February, each dollar equals around 95,000 tomans. So this devaluation affects the prices for ordinary Iranians for everyday life, not only medicines, but also clothes, food, and everything, house prices, house rents, and most pharmaceutical products in Iran are manufactured locally, and the government controls their prices, determines their prices. And the government, in the face of the devaluing currency and also a drop in production volume of domestic producers had no choice but to increase the prices. And in turn, the reduction in production volume was due to the low prices, and the manufacturers could not get the raw materials they needed for their products. We know that Iranian government allocates a considerable subsidy to medicines and pharmaceutical products. The government increased the subsidy in 2018 when U.S. President Donald Trump, back then in his first term, imposed harsh sanctions on the Iranian economy. But the Iranian government currently needs cash. The country is in an energy crisis. The country experiences power cuts. It has power shortage, suffers from power shortage, suffers from gas shortage. We have power cuts during this winter. The government is forced to announce public holidays. For example, today is announced a public holiday, has been announced a public holiday. It's Monday, it's a working day, but it's a public holiday. All public offices and universities and schools have been closed today, and the government needs cash to spend on energy infrastructure.
So a lot of barriers there, Reza, to counteracting the sharp rise in the price of medicines. And the government's also brought in measures to increase insurance coverage and boost domestic production. But why are none of these enough to counteract that sharp rise in price?
Well, the government has indeed increased the insurance coverage, but the insurance coverage doesn't keep up with the inflation and the price rises. And indeed, the government is planning to cut more subsidies in the future in recent months, and all of that would mean more hardship for ordinary Iranians. We had this report that 3 out of 10 Iranians that enter a pharmacy cannot get the medicines they need after seeing the new prices. And by cutting more subsidies in the next Persian New Year, that would start on March the 22nd, this means more hardship for ordinary Iranians. This is, in general, this is a situation that the economy, the country's economy in general, faces. The prices for all commodities are going up.
Reza Hatami live for us there from Tehran. Thank you so much. Now a quick look at some of the other top business stories from around the world. In January, Singapore saw its inflation rise at its slowest pace since February 2021, a sign that things were starting to ease a bit. Core inflation climbed 0.8% year on year, while overall prices increased by 1.2%, down from 1.5% in December. The easing comes shortly after the February 18 announcement of the 2025 budget, which includes additional support for households and businesses. Alibaba's shares reached a 3-year high following the announcement of a major AI infrastructure investment. The e-commerce giant plans to invest $52.4 billion over the next 3 years to expand its cloud computing and AI capabilities, marking its largest tech investment to date. Hong Kong-listed shares climbed 0.7%, reaching $18 intraday, the highest level since November 2021. Dalian iron ore futures ended a 4-day winning streak on Monday after higher taxes on Chinese steel reduced demand for iron ore. But falling inventories at Chinese ports helped limit the decline. The May iron ore contract on Dalian exchange dropped as much as 0.9% to around $114 per tonne, while the March contract on the Singapore exchange was down around 0.2% to $108 per tonne. The euro hit a 1-month high and German stock futures rose on Monday after Germany's Conservatives won the national election as expected. And now investors are waiting for more results to see if fiscal reforms are likely. DAX futures climbed 1.1%, the euro gained 0.5%, nearing its January peak. And staying with that win in Germany for Friedrich Merz's Christian Democrats, one of the biggest challenges for the next ruling party will be reviving the country's lacklustre economic growth. So why is the economy stuck in the slow lane? Imre Boz has the details.
After World War II, the German economy experienced phenomenal growth, a period dubbed the German economic miracle, or Wirtschaftswunder. But today the picture is not so pretty. For the past 2 years, Germany's economic growth has hit negative readings for 5 quarters. Growth in the fourth quarter of last year contracted 0.2%, worse than expected. Germany's manufacturing production has also seen continuous declines throughout all of last year. Manufacturing is one of the most important sectors in Germany's economy, contributing more than 18% of GDP in 2023. Reasons for its decline include structural challenges, a shortage of skilled labor, and excessive bureaucracy.
Looking at the German business environment, we see a lot of regulation and bureaucracy at the moment. We see also, with respect to growing markets and the way politics is working with the corporate world, it's a difficult environment right now. And so more and more companies are really considering shifting production and skills outside Germany.
The automotive sector is also going through a significant decline. The number of cars produced in Germany fell from 5.65 million in 2017 to 4.1 million in 2024. Analysts say this is due to a lack of investment and innovation. As energy costs continue to rise due to global conflicts, Germany's export sector also slowed down.
If the next government is not changing the corporate policy, how they treat companies, how they work with the industry, significantly in the way to be more friendly again for the companies and for investments, more and more companies will go away. And this is nothing which will then be easy to be turned around again. So once this is going more and more, those companies who left, those productions who left Germany, they will not come just back again.
So with the economy in a dire situation, Merz and his party needs to shake things up. Imre Boz, TRT World.
Negotiations between Ukraine and the United States are intensifying over the high-stakes minerals deal. Ukraine's been pushing back against a US proposal that would trade access to its vast mineral wealth for past military aid. But after discussing some amendments, the two sides now seem to be inching closer to an agreement. TRT World's Hassan Abdullah reports.
US President Donald Trump has surprised many Ukrainians by setting his sight on their mineral resources. He wants Ukraine to pay for US military support during the Biden administration. His demand is around $500 billion. Ukrainian President Volodymyr Zelensky says the actual amount is closer to $100 billion. Trump wants the money back and has linked it to Ukraine's mineral resources.
So we're going to sign a deal to get security because we have to do that. We're spending our treasure. They're spending their blood. They are. And they're very brave in every way you can imagine. But we are spending our treasure on a country that's very, very far away.
Some Ukrainian experts say Trump wants more than just the money.
Because we have to take into account that President Trump, he currently is constantly thinking about the geopolitical trade and commercial tensions with China. And for him, battery metals and for him, other strategic elements in metals, they are of utmost importance. And the key point here is that this is not only about rare earth elements. This is not only about permanent magnets. This is about at least, I would say, 30 to 50 critical positions, 20 of which at least Ukraine has a resource potential for.
And one of them is titanium. This area is to the north of Kyiv, just about 70 kilometers from the Belarus border. It's known to have large deposits of titanium. And with the growing American interest in Ukraine's natural resources, it's expected that there could be a lot of activity around here in the coming months. Most of the geological surveys carried out here were during the Soviet era. Ukrainian analysts say their country stands to gain too.
In my opinion, attracting investments in Ukrainian subsoil is very good process. Whoever it is, Americans, Europeans, they will come here, give their investments, bring new mining and enrichment technologies. These technologies will allow us to preserve the environment more.
But Oleksiy does have reservations about how the US could go about this, possibly taking away half of Ukraine's mineral revenues. Others say Ukraine stands to benefit by correctly placing itself in the geopolitical battle.
And if Ukraine at the moment can put itself onto the map, into the battle room, into the negotiating room, and propose a way to diversify the Western risks, to diversify, the geographic concentration risks that, for example, the United States currently has, this is a very, strong potential and a very positive advantage that we can offer to the United States economy.
The Ukrainian leadership remains concerned about security guarantees. With ongoing threats from Russia and uncertainty over future US military support, Kyiv is wary of any deal that might prioritize resource extraction over ironclad defense commitments. Zelensky says while economic partnerships are vital, they cannot come at the expense of Ukraine's sovereignty or its ability to protect itself. Hassan Abdullah, TRT World, Zhytomyr region, Ukraine.
The US government's decision to freeze funding for foreign aid has hit low-income countries across Africa and Asia the most. Nutrition, health and education projects are already in crisis, including in the remote Himalayan Republic of Nepal. Rajneesh Bandari has more from the capital, Kathmandu.
Charimaya Tamang is a human trafficking survivor. In 1996, she founded Shakti Samua, the world's first organization established and run by survivors of human trafficking. But it's largely run on US aid and has been badly impacted by Donald Trump freezing government funds.
It has affected many things. It's not about the office staff, but the human trafficking survivors are heavily affected. At this moment, there are 75 survivors in our 6 shelter homes. Their food and shelter have been affected. We are using other resources to feed and provide shelter, and we have said we'll pay the rent of the shelter houses later.
More than 300 non-governmental organizations are impacted in Nepal. In 2022, US aid and Nepal signed a 5-year development objective agreement worth $659 million. Trump's executive order has put those grants in limbo. Nepal was receiving aid to assist with a whole range of areas including health, education, agriculture, infrastructure, economic growth, climate change, humanitarian aid, and women and children empowerment. When US aid was frozen, all funded work was ordered to stop. This immediately hit neonatal health and programs aimed at reducing malnutrition in Nepal, a country where nearly 50,000 babies under the age of 1 die every 12 months.
The important issues of development, human trafficking, climate change issues, health, education, renewable energy, these are our priorities. Whether the foreign governments provide grants or not, we'll have to allocate money to finance them.
The American government has also suspended the $500 million infrastructure grants to expand Nepal's electricity grid and improve its road through the Millennium Challenge Corporation. For many change makers and survivors like Charimaya, it will be challenging to find alternative funding to continue their humanitarian work.
We need to intercept girls who are being trafficked, and we need to rescue those who are at risk. We would have been working on this process, and now it's all been affected.
The USAID freeze in Nepal could have many geopolitical consequences, but if this suspension leads to a complete cut in funding, it will have a massive impact on this developing nation that is heavily reliant on development and humanitarian work. Rajneesh Bandari, TRT World, Kathmandu.
Spain's olive oil industry is finally seeing relief after 2 years of drought-driven shortages sent prices soaring. But just as farmers were expecting a strong harvest, another challenge looms, the threat of new US tariffs. Omer Bakalolu reports.
For decades, Spain has been the world's largest producer of olive oil, supplying nearly half of the global market. The past 2 years, however, were devastating for the industry. Extreme weather conditions, slashed production, sending olive oil prices to record highs. Now, improved weather has led to a bumper harvest, bringing prices down significantly.
This year, Spain is going to have 1,300,000 tons, and the world is going to have 3 million. We are 40% worldwide this year, and as far as quality is concerned, I would go as far as to say that we are at the forefront of quality.
While this benefits consumers, it raises concern for producers who depend on stable pricing to sustain their businesses. But beyond price swings, farmers are increasingly worried about trade policies, and past tariffs have already left a mark.
Well, for us, the American market is one of the largest markets in the world. For us, it's very important, and we focus there most of our activities for both, for table olives and for olive oil.
Spanish producers still remember the impact of Trump tariffs imposed on black olives in 2017, which reduced exports by nearly half. The European Union challenged those duties at the World Trade Organization, estimating they cost the industry around $850 million.
Well, actually, we are still suffering the tariffs for the table olives, where we had to reduce our export for black olives into that market. And for olive oil, we had a tariff as well for some quantities for the 25% in olive oil that where we had to suffer our export. Now they are in suspense, but we don't know if they're going to come back and in what quantity.
Tariffs have already done a lot of damage to the sector. At the moment, we do not yet know if tariffs will be imposed or not. I hope that the administrations do their job well and do not penalize Spanish olive oil again, as happened in those years.
Despite a strong harvest and improved quality, Spanish farmers are nervously watching Washington, hoping history doesn't repeat itself. Ömer Bakkaloglu, TRT World.
That's all your business news for now. Thanks for watching.